The US dollar is the world's reserve currency because America won World War II, except that's only half the story. For the last 80 years, the dollar has been the global standard. Every oil contract, every major trade, every central bank's insurance policy priced in dollars. It's the accepted explanation. America was strong, so the world adopted its currency. Seems logical, but logic and incentive aren't the same thing, and once you look at what actually gets paid to whom, the story flips entirely. Start here, Bretton Woods, 1944. The war was ending. Britain was broke. The French were about to be liberated, and the Americans sat down and said, "We'll anchor the global system to our currency." Other nations agreed. Why? Because at that moment, America held 2/3 of the world's gold. They had the leverage. The dollar wasn't chosen because it was best. It was chosen because the alternative was chaos. Once the dollar became the standard, something interesting happened. Every foreign government needed dollars to trade. Every importer needed dollars to buy American goods. Every oil-producing nation needed dollars to sell oil. Demand for dollars skyrocketed. That demand meant the US could print more of them without the currency collapsing. Free money, soft power made tangible. Here's where it gets interesting. The real benefit wasn't just printing currency. It was that America could borrow money cheaper than anyone else. Why? Because lenders knew dollars would always be in demand. A US Treasury bond, essentially a government IOU, became the safest asset on earth. Banks, pension funds, dictators with offshore accounts all parked their reserves in treasuries. America borrowed trillions at historically low rates and spent them on everything from highways to wars. But here's the catch, and this is where most stories get it wrong. That privilege came with a hidden tax. To keep the dollar as reserve currency, America had to maintain military supremacy. It had to keep global shipping lanes open. It had to be the enforcer. Every naval base, every defense treaty, every aircraft carrier stationed overseas, that's the price of seigniorage. You don't get free money, you get the bill for the world's police force. Now the real explanation emerges. The dollar isn't reserve currency because it's inherently superior. It's reserve currency because the US military made it so, and because every other nation found it cheaper to accept dollars than to challenge the system. It's a bargain, not a birthright. China doesn't accept dollars because it loves America. It accepts dollars because 40% of its exports go to dollar-denominated markets. So what's changing? 3 things. First, America's share of global GDP is shrinking. In 1945, the US was 50% of world output. Today, it's around 25%. Second, alternatives are emerging. The euro exists. China's yuan is slowly becoming more tradable. Third, and most important, the military costs of maintaining the dollar system keep rising, while the economic benefits spread thinner. None of this means the dollar collapses tomorrow. Reserve currencies don't die fast, they fade. Sterling didn't vanish in 1945, it just slowly became less important over decades. But the incentive structure that kept the dollar dominant is eroding. When the cost of being global policemen exceeds the benefit of cheap borrowing, nations start asking why they're doing it. The real story isn't is the dollar dying, it's what happens when a nation stops wanting to pay for global stability. That's the loop worth watching. Because whoever answers that question first, whoever builds the alternative system, doesn't inherit the privilege, they inherit the bill. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe to keep tracking the shifts in global power. We break down the economics behind the headlines before they become headlines. This video is for educational and informational purposes only and is not financial advice. Always do your own research.